Welcome back, everybody, to the weekend stock market update video. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, definitely also hit that subscribe button. And now, let's get right into the market. All right, so welcome back once again, and you guys can see right here S&P 500 closes at another record, notches longest weekly winning streak since 2024. But that was a 20% correction. As of right now, things are just going ballistic. Now, if you look at my screen, look at this right here. Even though the market went higher, advancing 47.7% on Friday, declining 48.1. If you look at it, Dow was flat, Nasdaq up 1.71%, S&P up 0.84%, and Russell going up 0.68%. And this is where things really get interesting. And you can see, a lot of the sectors are actually more than half are actually in red or pretty much flat. But look at who led the way: technology, basic materials, and a little bit from consumer cyclical and real estate. But look at right here. What names are actually doing that, guys? It's right here, just right here, and mostly right here. Semiconductors, Nvidia, Broadcom, AMU. I have not seen this type of move on AMU since the stock debuted. Same thing goes for AMD and even Intel. Usually moves $2, $3. That's the biggest, possibly $4 gains I have seen past couple of years. Now it's like 20. QCOM another one, and I don't even want to talk about WDC, STX, SNDK, which is nearing almost $2,000 a share. Now, if you look at it, this is not a joke. This is not a bluff. When you look at some of these names like financials, look at Bank of America, down nearly 3%. Wells Fargo, these are big banks, down 4.45%. JPM down 1.36%, almost closing that gap where we gapped up on that ceasefire news. Visa, MA, a lot of these names are down. So what the heck happened? Look at the healthcare names. A lot of red to a lot of flat, and only green right here where semiconductors are going up. Some actually got hit yesterday. Software names again, including Microsoft, which was down over 1%. So things are not really pretty when you look at the market. But when you look at here, just semiconductors, you'll be like, oh, we're going to new highs. Extremely bullish, right? Look at what we got next week. Tuesday, we have CPI, and it doesn't really matter because you guys saw the job numbers coming out on Friday. Even the consumer sentiment is the lowest reading in the history we got on Friday. And why this does not matter? Because you're going to see maybe slightly up to flat because these are just numbers on paper. When you go and buy actual product, that's when you're going to see inflation, how high it's going. So these numbers are all cooked up, and most likely they're going to be cooked up again. Maybe, just to show that, yes, it's going higher. You might see, it's sticking a tiny bit, but what numbers we're getting for the inflation, that's definitely not true. Now, we got some earnings next week, but nothing that uh, you know is actually going to move the market until we have earnings from Nvidia, which is on I think May 20th. So let's have a look at S&P 500 and see where things are going. All right, so on SPY ETF, it was up 0.83%, almost 1%. And if you look at the fib level here, even if we get, which we're not getting, if we get a pullback down to 38% retracement, things are pretty much in line from the lows to the highs, in line with that 696.63, which is this pivot before where we got rejected multiple times, previous all-time highs. Now, I don't think that's going to be the case. I don't think it's going to drop $30, even though the market can go up $30. And I'll show it to you guys when we get to Qs. This is just insane amount of buying and the rally just continuing. Look at this 90-degree angle going vertical, guys. I'm not against bull market. Don't get me wrong. I'm not trying to be a big bear, but the way things are going up, it's really scary because a lot of people are chasing and buying into these rallies and thinking that market will never come back, just like when market was down here, that market is gonna go and crash and burn and go down to zero. What happened? Right now, nobody thinks that market can actually go lower. And this is why this is very dangerous if you're participating in this rally and buying into this rally. So now a key zone to watch if we get a pullback. Looks like we had a lot of trouble getting under $730. That's going to be one. We do have a gap at 725-ish. That's another one to watch if we get under 730, and then possibly a move down to 719 to 718. There is a gap there as well. And then this key zone, which is at $712.48 to the upside. There is a massive call wall at 740. So if things are going to continue, which doesn't seem like it's going to come down anytime soon, we can definitely get to 740. And if we get over that, 750, definitely something to look into to the upside. But again, the higher we go, the faster this rally goes even higher. It's just gonna be whether you want to sit on the sideline and wait, or you want to go and participate in this rally and get burned on a pullback. Because even if we get a 38% retracement, which is a minor, guys, and again, let me repeat that, a minor retracement off of this massive rally, we're just gonna get down to previous all-time highs, which is basically nothing. But we're not even getting anywhere with any pullback. So that's why I'm just waiting on the sideline, not doing much, because yes, you can make money, you can day trade, but this is getting very dangerous, especially for the folks that are new in the market and now they think that market will never pull back and things are just gonna continue higher. I see a lot of noises out there. Just when there were a lot of noises down here, like, oh, what are you talking about? Face repair rally and buying the dip, we're gonna crash. And now it's completely the opposite. So careful chasing up here. On triple Q, it's up 2.34%. So Friday, there wasn't actually any big catalyst. And first of all, guys, one thing to point out, and I think the market doesn't care about the war and the gas prices anymore, because we have seen USO going up and making brand new all-time highs. At the same time, market was making all-time highs. Now we see USO going down, market and USO. I'm talking about oil. If you don't know what USO is, you can go and look into your chart. I'm just using USO as a proxy for crude oil, right? So you can see, I mean, it just insane rally. This one is even more scary. It's pretty much mimicking S or double X or SMH. Straight up, no pullback, nothing. These are red candles, but we did not stay red. Look at this pullback from Thursday. How much we actually went down? I think we went up to 700, 701. From there, we actually came down to 691. But then how much did we actually give back for the day? 83 cents. That was the pullback we got here on Qs. 83 cents, guys. And then market rallied. As a matter of fact, if you go into an hourly chart, this is actually a gap up. So there is a gap around 695-ish here on Qs from Friday. Yes, Friday. So this week, look at this. This is Friday, Thursday, Wednesday. This is Tuesday. Another. This was a gap up also, and this is Monday. So let's just have a look right here. So this is Monday from the lows to the highs. That's about 6.22%, about $41 we rallied in 1 week. You think this is normal? Absolutely not. And like with what catalyst? AMD moving the market? Is that a mega cap? No. MU, is that a mega cap? No. What's moving the market? Yes, Google had good earnings. Some of these stocks they went higher, but I think the rally and all the stuff already was kind of priced in. But even with that, we had another massive move on Friday, 2.34%. And I think even after hours, sitting somewhere around 712, 713, you can see it right here. So that is a big move here on Qs. Now, if we get a pullback, the first level to watch now, that would be 705. Second one would be uh, 700, and then only then if we come back down, there will be a pullback around 695. That's going to be another level to watch, which is going to be a gap fill from Thursday or Friday gap up, but that's where we closed. So that's going to be the gap fill for Friday's gap up. And then, not to mention, we have this gap down here, which is around 681, 682 last week. And don't forget about this gap down here, which is at 675, 674. So, I mean, look at this move. You think this is going to continue forever? Some people think it's going to continue. If you make any comments about pullbacks, because usually what happens within a really healthy bull market, higher lows and higher highs. And we're just not seeing that. And if this thing continues, well, next stop would be 715 to 720. And who knows? It might be catching up to S&P SPY, and they might be going together at the same time at same price, which is going to be insane because this one is moving way faster. Now, if you look at XLF, the second heaviest weight on S&P 500, it's not doing anything. Look at RSP. Yes, we did make all-time highs, but immediately got rejection and we're trading below previous all-time highs. But S&P is doing it with only fewer names. As a matter of fact, you guys saw those names on stock market map, just that same area. Memory chips, semiconductors, these are the stocks that are doing this in the market. So, to the upside, yes, the rally can continue. I'm not saying this is the top because it's really much easier to call a bottom, but it's really hard to call a top. And if you thought this was a top, look at this. If you thought this was a top, a couple more gap ups, right? Three, four gap up last week for what? Absolutely nothing. So we'll see how things go, but it's getting very dangerous right now to participate and go, especially to the long side here in this market. On Dow, it was actually flat on the day, and this one here did not make all-time highs. So, 500, we're getting massive rejection. So if it gets over 500 here on DIA, then I would think we might come up and retest previous all-time highs. That's going to be right here around 505. Now, there is a gap down here that's going to be around 493-ish. We're still holding around that support zone 496. So if that gives up, we might come down here and fill the gap from last week. And this one was very close to even close this gap, guys. We did close most of the gap here, but especially when it comes to S&P and Nasdaq, they're not doing the same thing. So this thing, watch out, 500 breaks, 505 possible, and maybe even into blue skies. But as of right now, looks, a bit weak here. And if you look at it, I mean, this thing can turn into some sort of a double top here. You can see top number one, top number two, but where it would be the neckline, all the way down here. So we'll see how, Dow Jones actually going next week. But as of right now, we're just stuck in a range. I would say 500, and bottom of the range would be 486. So if you see 500 breaking, then we're going to the upside. If you see this low taken out, 486.79, we're going to fill the gap and possibly go lower here on Dow. All right, so here on IWM up 0.68%. We did an all-time high on Thursday session. And then what happened, guys? You can see, I mean, this is actually pretty bearish here on IWM. We had this reversal candle, massive bearish engulfing candle, and then followed by an inside day on Friday. Even though we were up, but we did not take out high of this candle. So what's going to be interesting, if we take out 281 come next week, Monday, Tuesday, somewhere there, we might be pulling into the next gap, which is at 278. And look at that 38% retracement on this one, exactly down to previous all-time highs, 268. There is a gap right here, right about 270. We got really close to it. We did not close the gap. completely, and this thing went higher. Now, another thing that I want to talk about here on IWM, Russell, right? It's running on smaller businesses, smaller companies, zombie companies, as we call it, right? If the rates are staying higher for longer, and we're not going to get a cut. And now that we hear maybe there is a chance where we see a rate hike next year, or who knows what's going to happen, right? But there is definitely no cuts. Maybe, you know, people are just thinking that Kevin Warsh will come in and do some cutting. Maybe he will do that, maybe 25 basis points, maybe 50 basis points. But guess what? Kevin Warsh is a different man. If he sees that inflation actually going higher, he can come back and raise 100 points immediately. He might be, pleasing Trump, maybe cutting a little bit here, but the result at the end, it's going to be really hawkish. And as of right now, he said that, he's not going to do that because he thinks that Fed should be independent. And if they're independent, obviously if he cuts rates, people will talk about him that he's just a puppet. So I don't think he wants that kind of things. Maybe he will cut with some, numbers, actual numbers showing that inflation heading in the right direction. But as of right now, it's not. It's really bad, and things are not coming down. You cannot tell me we're paying 450, 550 a gallon for the gas and diesel even higher, right? And inflation is fine, nothing went up. If you tell me that, I don't know where and how and what type of environment you're living in. Obviously, you have no clue what higher oil prices can cause, and I don't think this is time to cut. But despite all that, look at the strength. It still was actually able to make all-time highs. So watch out for these levels. If this thing takes out previous highs, which is 287 and some change, we might look into like, let's say 290, 295. These are going to be some upside target right here on IWM. And you can see this trend line actually, as we do this fib levels from the low to this point, even this point, if this trend line breaks, which is also, I mean, we had a little bit of consolidation here, but nothing major. If this trend line breaks and we get another, red candle like let's say this one, we would be pulling back to fill the gap, maybe even come and fill this gap. Because if you look at JPM, as a matter of fact, we need to look at JPM because we cannot do a stock market update without a massive, bank like JPM. What you're seeing here, guys, this is actually a gap, the ceasefire gap, right? This was a gap up on the ceasefire. We pulled back in massively. The market did not do that. We went higher. And then we did not take out all time highs. As a matter of fact, we did not even take out this high. So if you look at it weekly, we're just making lower highs. High, lower high, and this is a lower high, right? So that 298, how far we are from that 298. And if you look at S&P, S&P is doing completely different things. Now, another one, I want to look at XLF, which is the financial sector ETF. And look at what's happening, guys. Look at the move on Friday, right? It's not pretty. And that's where I think, look at this. We had this gap up and go. We came back in. It was a nice recovery. But look at slowly what's happening. Another thing I want to show you guys right here, that this is actually a balance range. And we're actually breaking down from this balance. And we did close pretty much near the low of the session. So that's not bullish. That's definitely not bullish. Another move to the downside, and we could be filling this entire gap, which is the follow through day about a month and a half ago, right? This gap up, where we got the announcement of the ceasefire, market gapped up and continued higher, where you're not seeing that's happening here on JPM, you're not seeing that's happening here on XLF. So how is the market going? Well, the same names like this one here, SNDK, carrying the market. Look at this move. I mean, this is just insane. This was the channel I did show you guys before on MU, and look at the breakout and bunch of gap and go here. As a matter of fact, if you go to the monthly time frame, guys, I don't know what to call this. This is really bizarre. I mean, you cannot have something like this happening in the market. And just because a stock like AMU, SNDK, some of the other names like STX, WDC, these were just, you know, 25, $30 stocks. And now they're going to almost $1,000 a piece. So it's an insane market. Look at what VIX is doing past couple days. If we go to VIX, what's happening here on VIX? Well, one thing I want to point out here, I don't have the Bollinger Bands here. We're within this falling wedge pattern. We had it before, even right here. What happened? We broke and then we went higher. And this thing is getting Bollinger Band squeeze. Lower Bollinger Band, it's right about here. I don't have it here on TradingView, but I do have it on Webull, and you can put the Bollinger Bands yourself, and you can see that upper one is right about 19, $20 right here. So it's getting that Bollinger Band squeeze, and if this thing somehow the way this thing is getting like tight here, we get a big breakout. Don't forget we have a gap up here. So everything is lining up. And when things can break in a really bad way. HYG, high yield bond, another one. The smart money did not make brand new all time highs. Look at Microsoft. It's a market moving stock. And what's happening? It's not making new all time highs. So a lot of the names are making all-time highs, but no confirmation, especially from XLF, stocks like JPM, HYG, and even the RSI. When you put it, I mean, especially when you look at SOXX, look at this, guys. I mean, this is insane. Look at the 38% retracement, now 439. Still, even if we do that, it's nothing. It's absolutely nothing, even if we do that. This is really a crazy, crazy move. And look at the, I can put the RSI here. You guys can see it. It is getting extremely, extremely overbought. Look at the RSI. We do have bearish divergence here. You can see the RSI never moved higher, and the stock is making new highs. So we'll see how that plays out going into next few days, starting next week, and I'll definitely keep you guys updated. And if you guys are really interested and into trading, you want to get daily trade ideas, swing trade ideas, live trading, definitely head over to Patreon. That link will be down below in the description for you guys. And if you go for annual membership, you do save some money and you get all my charts, my trades, everything that I do in real time. And I'll catch up with you guys in the next video.